All right, welcome back for the episode of Carnivore Trades. Today is Tuesday, October 17th, 2023. If you're not done so already, please give me a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here today. So markets here today with a gap down, and spiders are basically down just 0.25% right now. So we had a pretty remarkable dip buy in the morning, and then in the afternoon we kind of topped out and came back down. Triple Qs are taking the worst of it here. And again, it's been kind of that theme a little bit lately. I think I talked about this earlier or yesterday in the last couple of days. I think the Qs kind of like stall out here a little bit and everything else kind of catches up to a degree. But a couple of stories today, a couple of headlines. So retail sales coming in way hotter than expected. And again, just another inflationary print here. Yields holding up again. We got to talk about that in a second. Another headline today too. NVIDIA, kind of the same, right, par for the course type of headline. Again, more just kind of like talk about restrictions on chips to China, and it sold off early and the dip was bought. Why? I think this is just like OPEX stuff here. Again, it's par for the course. We already kind of knew that type of stuff. But it's a good excuse for institutions to be able to bag puts at the lows and then bag call buyers, or bag call buyers from yesterday and then bag puts at the lows. This is typical type of OPEX action. Again, same thing with the spiders here. They gapped it down. You can actually see the triple Qs went to kind of a local double bottom. So a little mini double bottom there. We rallied off of that. And then when everybody's thinking, oh, we're going to go make new highs, we made slightly new local highs. We fade right off of that. So again, markets here, just a lot of whipsaw, a lot of chop. That's what we're going to talk about, or that's what we're not going to make too much out of it other than that. However, I do want to bring up yields here, and specifically the 2-year yield. So you guys know that my sort of line in the sand is 5.33. We did make new highs. So we've made new, I think, 16-year highs on the 2-year yield. This is a big deal. I've talked about this ad nauseum before. If this gets above 5.33, the market will not like that, I promise you. I don't care that the Fed says, oh, we look at PCE, we look at CPI, we look at the labor data. This is really what they look at. They're not going to admit that, but this is what matters here. The 2-year yield has got to be below the Fed funds rate, otherwise the Fed has to continue hiking. I promise you the market does not want to hear that. The stock market is under the impression right now that the Fed is done. Right, so it's we got with less than 10 basis points away at some point, or at one point today, and then we pulled back in here. Let me just quickly show you. Previously, Fed funds rate was at 5, and back in March it was at 4.5. You look at the 2-year yield. It's not a coincidence that the second it got back below 4% here, there's your 4.5, which was right here, March 13th. It's not a coincidence that the market bottomed on March 13th. Likewise, if we go back to this, I believe it was right here. Got to find the exact level. July 6th. So we got back above 5, which was the effective Fed funds rate at that point. And you can look at July 6th. We started to sell off, and then we closed back green. So again, just be aware of that. The market really cares about this. This is why I talk about it all the time. Again, they're not going to hear that in the financial media. You're not going to hear the Fed admit that. But that's the big level where the market's not going to like it, and the market's probably going to freak out. Everybody's always hyper-focused on the 10-year yield. And, of course, the 10-year yield's important. It sets mortgage rates. But this is the one that determines whether the Fed has got a hike or not. So that is the big deal. Now, again, even if we get above there this week, I think the market will hold up. Again, I just spent a bunch of time telling you about OPEX. It's not a coincidence that we tend to stay range bound during an OPEX week, but keep that in mind. Big picture here, though, outside of all that, if you just look at this objectively right now, you just have bullish consolidation here on the daily. And, even despite all the whipsaw today and despite that big sell, you got higher lows here and you have a slight outside move today, although it did get rejected. So right now it does look like upward pressure is trying to push us through this, 437, 438 area. And you have higher lows doing it. So I'll give the bulls the upside bias here. I just don't think we're quite ready to break out. I don't think we'll break out before, probably next week. We might just stay range bound here. but markets are holding up. And that's despite the yields really starting to push higher. And again, specifically that 2-year that just made new 16-year highs today. Again, if that continues, it's not going to be a positive. Now, I just want to preface this also. Don't think that, if we pierce it and get to 5.331, Aaron said go nuclear short, go all in short. It's not how, okay, don't think of it like that, right? You have to actually stay through it. Like we got through the Fed funds rate here on the 6th and it came back down, right? It came back down pretty quickly and the market was able to recover. Don't look at it like, it pierced it by 1 point, so it's a nuclear short the market. Just keep that in mind. But if it sustains above there and it blows it out and they don't save it, then there's going to be problems in the market. But right now, again, objectively, this is just bullish consolidation on the daily for another move. We talked about, 445 area, maybe 447. Again, you can just take a simple measured move here right to this area and just copy that. And if we just put it to the low, it takes you right up into that range. Who knows? Maybe we come down and make another lower low, and then we got to redo this, and maybe it lines up with 445. That's certainly possible. But again, right now, like I said, objectively, this is fine. Another reason why I didn't think the market would really sell off today, and some of my traders pointed this out in the room. Good catch, too. Take a look at the IWM. That went green within the first, couple minutes of the day. IWM goes green. It's going to be a leading indicator. The market's probably going to try and hold up. Watching this here. It's 3:53 p.m. here. So watch this area, 174.61. Close above that would be a close above the 20 moving average really for the first time. This was kind of right on it, but really for the first time since September 1st. So that could be a change of character. You'd also have slight higher lows there. You'd also make a case you've got like a short-term little wedge setup there on the Russell. So we'll watch that as well. But IWM holding up okay. And that was the leader today, up 1.16%. When that's the case, market is generally going to hold up just fine. DIA here down 39 cents, trying to hold above that 200 moving average. No confirmation above the 200 yet, but again, nice little pattern here. Continuation yesterday and just holding up. Again, this can still get to 343, 344, but I don't think it happens right away. You probably need to do a little bit more backing and filling there. Semiconductors obviously red today, down 1.3 with NVIDIA. Lower, we are just kind of wedged between that 20 and 50 MA, and pretty good volume on that too. So definitely some shares sold, but they did buy the dip, and we'll respect it for the meantime. It is red again. See a lot of whipsaw here. You don't want to see another lower high on the SMH. That could be problematic. And again, as you guys know, this is my big level here. That pivot gets taken out, especially on a weekly close. There's lots of air for the SMH there. But again, came off the lows here, and we'll respect it. Again, it's OPEX. This is the type of stuff that happens. IGV still very strong. And that kind of made up for SMH getting the whack today. Up $1.47 there on the IGV. That probably can still get to 360. There's a lot of resistance there, though, so just be aware of that. But if this bakes in the oven a little bit longer, it puts in a pattern, I don't see why it can't get there. IGV making up for some of the weakness in big tech. Dow Transports, again, needed a follow-through day. They got it. Still no close. I think right now, this is telling us, though, let's say 15,170, we'll just say 15,175, 15,180. You get a close above these highs here. That's telling you that's the line in the sand here for the transports, right? It's been hammering on it for the last 5-6 days. We haven't been able to close above it. So that's clearly a point of interest. Look at, you could even draw a trend line here right there, and you could kind of see that's where we based before we broke down. So right there, you get a close above that. You'll have some resistance with the 50 and 100. A little necktie pattern there, but again, 15.5 is definitely not out of the question. This could squeeze up a little bit. So transport's acting a little bit better here. Nice to string 2 winning days in a row, but you need to get above that level there. Maybe 15.2 just to be safe. But that's the big line in the sand there. All right, interest rates we already talked about a little bit, but again, you can see the 2-year there. That's the big line in the sand. 5-year, that's making new multi-decade highs. What can you say? Trend is up. 10-year, so now the long end is starting to come back a little bit. Lower high there. And then same thing with the 30-year. I think the long bond here is trying to come back down. It remains to be seen if we take this pattern out here. But I think on the long bond, we have a chance of coming back in. And again, getting down to 4.2, 4.5, or excuse me, 4.42, 4.45. And the same thing on the 10-year, 4.35, 4.4, somewhere in that area. But again, that short end starting to stick out. All right, let's flip over to housing. We'll start with the XHB as always. So that's up 0.25% today. Still finding resistance at that 20 MA. I don't like this pattern here on the XHB. I think this does need to go lower. And again, higher for longer narrative is pushing down on the XHB right now. But again, I think $70 or so is good support. You guys know that. You know, if you can get back above this red bar, you can improve technical positioning. But right now, still on the softer side there. VNQ also coming back in. So no confirmation even above the 20. We had a nice rally today and came all the way back in. It's not dead. Again, you did close above the 20 yesterday, so there's plenty of chance, plenty of room for like a zigzag up. Still resistance at 78, 79, you know, maybe even 80 kind of on a weekly level. So right there, your kind of weekly breakdown. But it is catching a small bid, or at least over the last day or so, and we'll give it that for now. XLF here, banks did okay today. So XLF up 0.33%. Goldman did report, and that is lower, but we're seeing... not JPM. We're seeing kind of the regionals here. KRE up 2%. Again, why is the Russell up? KRE's up 2%. So that's going to generally tell the story there. You could even make a case, you know, watch the KRE. It's trying to improve here. You can make a case that's a micro kind of 4-hour head and shoulder pattern. And just eyeballing it, that might take you back up to 45. So watch that. That would be a big positive for the Russell. But KRE trying to make higher highs there. That's trying to improve technical positioning. KBE still has resistance at 38, but that's looking a lot better there as well. And then broker dealers here, slight lower high. Again, 490 still resistance. You got to get through that to get to 500. Let's just look at the KBWB. That's in a little bit better shape as well. Again, same kind of inverse head and shoulder look there. So if that can hold up, and I mean technically that's triggering right now via the close here. So, I mean, we can just, for fun, right, just do this real quick. You know, that could take you back up to 42.50. So maybe these are due for a little bit of a zigzag there. There's a lot of resistance right there, though. So it doesn't mean that it's going to bottom and go to new highs. But watch that pattern there in the near term. That'll certainly help out the Russell 2000. All right, over to crude here. So kind of an inside day, just flat. If this consolidates, it can have another push up. Otherwise, it's just range bound. Here's your support. Here's your resistance. I don't really have a bias on it right now. I think it's just kind of in backing and filling mode. XLE, same thing, although that still has resistance at 92. It's had a nice pop off the lows. I'm not touching it right now. It's too sloppy of a pattern. XOP back above this 150 area and above that red bar high. So that is a bullish indicator there on the weekly. And you are above that weekly red bar there as well. So if we close above that, this could go higher. So keep that in mind. And then OIH also, again, held that 20-week moving average, and that's acting well still. So nice day there. Still some resistance here with this big red, but it's holding up. All right, uranium here, CCJ, nice outside move. Proving positioning a little bit better. You guys know I just don't like the weekly there. I don't like that close below that green bar. So again, I think that's in consolidation mode. And then URNM, also a slight outside day here, holding the 42 handle and getting a little bit of a micro bid. Again, not doing anything with this at the moment. All right, here, market's about to close here. There's the closing bell. I just want to look at Russell 2000. Okay, so there's your official close above the 20 MA. So kudos there to the Russell. Let's flip over to Natty. That continued to pull back here. Nothing crazy. Into the 20 MA. This is your breakout area. And this should be your support level. So if you're looking to get in, this is kind of where you want it. But nat gas pulling into 3. And I like the move on the weekly. Just kind of riding that moving average there. But if this can pop back up, you actually have a weekly gap on this too at 320. So if this can pop back up by the end of the week, this can really start to push higher. But again, nat gas testing that 3 handle. All right, dollar index here. So that did finish the day down a penny, nothing terrible. Was down a lot earlier, and then it kind of came off the lows. Actually got a big pop on retail sales, obviously, and then it pulled back in, and they're just kind of chopping around here. Technically on the daily, here's kind of the caveat, right? So the market here, spiders, SPX, that's technically a strong daily pattern. But the dollar here too, I mean, yeah, you close below this green bar, but you're back above the 20 and you have a bullish inside bar. Like there's really no other way around that. So this is still holding up okay. And again, trend is up on the monthly. And that's the dominant trend right now until proven otherwise. On the weekly, you're still inside of that reversal candle. So keep that in mind. But right now, dollar index holding up. And again, a lot of cross currents going on in this market. Don't take anything for granted. Some of this may be OPEX related when you get, different asset classes to, correlations start to break down. But again, objectively, a dollar is fine right here. Gold, again, also fine, right? So big pop into 1900 or 1950. And this could just be putting an inside bar consolidation. So we got, basically bull flag on the spiders, on the dollar, and on gold starting to form here. All the while, yields are making new highs, essentially. So again, lots of cross currents here. One of them's lying. So one of them's got to be lying at some point. But we'll see. Gold holding up. We got back above this little previous wedge trend line here. And just consolidating. If this hangs in here, this can go higher. If you get de-escalation in the Middle East, this will come back down. Just be aware of that. Same thing with silver, although silver did make a little outside move today. So outside move up, stalling at the 50 again. If this consolidates here, this is poised for a move to 24. Don't see any problems there. And then platinum getting back above the 20 moving average. Still watching this one for pattern. Might have to make one more new low, but it's holding up okay. And then palladium, you guys know my thoughts on that. Copper. Pretty good sell today, but came right back off the lows. So hanging in there for now, holding on to its last legs here, holding on to that green bar. But again, I still think this is poised for 340, maybe even 330 at this point. All right, lastly, Bitcoin here. So that's still holding up. So impressive here. So even though we had the pump and dump and total fake news, is very interesting, right? So this is where Bitcoin was before the, if we look at let's just look at the hourly. Bitcoin was at 26.9 before this whole thing came out. And then it ramped up all the way to 30K and then came back. But it's still, right now in the hourly, that's just bullish consolidation beneath that little trend line there. And that goes back to right here. That's a big pivot point of control. Despite the fake news, it's holding up. You can't really argue with that. So it's hanging in there just fine. This could have another shot to 30 if it consolidates. I guess I can say that right now. But again, I'm neutral on it until proven otherwise. I'm not touching it. The market's way too illiquid and there's way too many fake outs. And again, yesterday was more evidence of that. All right, lastly, again, spiders here holding up okay. Let's just see, we closed right at 436. So a little bit of a short covering into the close there. Nothing great, nothing terrible. Objectively, this pattern is fine. By the way, another thing too, the VIX held up really well into the close too. Just keep that in mind. Again, it's not a big deal, but spiders down 2 pennies, VIXy up 63 cents. We do have VIXpiration tomorrow. Expect more shenanigans. But big takeaway here, again, watch that 2-year yield. If we get it above 5.33, the market's not going to like it, and they're going to need to do something about that to get that away from that Fed funds rate. Anyways, guys, going to wrap up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all tomorrow.